Well, there you go. That's M&M. That's been having a good run since yesterday. But the big story today is all about Nykaa, isn't it? What an IPO it has turned out to be. Going in for a $7 billion valuation, you've seen a pop of over 100% with the first trade at 2,003 rupees a share. In fact, Nykaa's market capitalization is already crossed 1 lakh crore rupees. This story is special for so many reasons, and as they say, beauty is in the eye of the beholder, and clearly the investor community, the markets have spoken out loudly where they think the beauty really lies. But if you look at Nykaa, founded by former investment banker Falguni Nair, she started the Nykaa story after she was 50 years old. She was very clear from day one that Nykaa would be listed on the Lal Street one day, but only when it is profitable. And that's exactly what Nykaa did last year. And in that sense, it is a very rare unicorn. A rare unicorn because while it burns cash for customer acquisition to expand, it has been very, very, very conscious of its bottom line. So in the last financial year, it actually delivered a profit of nearly 70 crore rupees. And the markets therefore have spoken up. And you can see the kind of response you've seen. Now, only time will, of course, tell us which way Nykaa is going to be headed. Is it going to go down the Zomato route, which had seen a similar bumper listing? It had also crossed the 1 lakh crore rupee market capitalization on day one. And then you've seen the stock plateau out. Or can it be a listing like that of DMart? An IPO that happened many years ago, but is still considered to be one of the most successful IPOs. That perhaps is going to be one of the biggest challenges for Falguni Nair, who will also go down in history for being the first woman founder to hit the unicorn status, and then to be the first female founder of a unicorn company that listed on the Lal Street. So a lot of firsts there for Falguni Nair, and we can promise you we will get the newsmaker of the day for you at ET Now, right here at 1:35 p.m. We have a very special discussion lined up for you today where we're being joined by Ganesh as well as Karan Taurani. Gentlemen, welcome to ET Now. Thank you so much. It's a big, big, big day. Ganesh, I'll come to you. What a bumper listing. Look at that pop. It's over 100%. Nykaa in that sense has almost a monopoly when you talk about a marketplace for beauty, personal care, but this is a company that is very clear. It wants to rule the roost when it comes to men's. It has a separate app now as far as fashion also goes.
Yeah, absolutely. I think this is great development and great news for the new age startups and also for women entrepreneurs. As you rightly mentioned, this business model has ticked several boxes for all of us. It's a multi-brand retailer. It's an inventory-led e-commerce model. It's direct D2C brands of their own. They also have a marketplace model wherein they sell other brands. I think all of it ticks very many boxes. I don't know about the market price. I don't operate in the market. I can't talk about the current price. But in terms of the business model, they are a market leader. It's a new age company and has several benefits. They already have a leading market share of about 18% or so. I think it's a great position to be in. The entire personal beauty care market, the fashion market, which they play in, the men's fashion, all of them are very under-penetrated in terms of online reach. And as you all know, on the consumer side, the market has shifted online. Thanks to COVID, it's further accelerated. 5 to 10 years of leapfrogging of consumer behavior has happened. People are not going back to the earlier way of buying from brick and mortar. The entire e-commerce, the selection, the discount, the price, the convenience it offers is unquestioned, unparalleled. That consumer behavior change has happened. So in terms of consumer behavior change, in terms of market leadership in the market, they have done very well. And even for us in the startup phase, in the new age company phase, there are several new things with this particular business model. And as you mentioned, it's a company that turned profitable. It is not burning money, having negative unit economics in order to acquire customers. Very sensibly driven. They have raised low amount of capital, reached profitability quickly, and have sensibly gone about expansion rather than trying to reach the unicorn status in 2 to 3 years. I'm not questioning those other models, but this is a very sensibly well-run company. Having said all of that stuff, so stand by my caveat, can't comment on the market price and how it will move because I'm not the expert there. You have other experts who would talk about the market prices. But latest trends, D2C brand, capitalizing on the flywheel effect and the network effect that digital companies give you. All of this is great news for the company and for the investors.
And in fact, you're seeing that share price now at about 2,100 rupees a share. Karan Taurani, look at that pop. Everybody was talking about, will we see 100% pop? It has happened. Its market capitalizations crossed 1 lakh crore rupees. I think what a lot of our viewers will want to know is it worth it at this price?
So I think, at these valuations, there is too much price in, for Nykaa. Just to give a perspective in terms of what are the kind of multiples they are trading. So, they at listing price, they were coming at an implied EV sales multiple of about 7.5 times basis FY27, which is a 5-year forward number. And at this kind of a premium, what they've got listed at, they would be somewhere close to 12 to 14 times. Now, the question here is that, why would a company deserve such a multiple? Because the global peers are trading at almost about 3.5 times the PPC segment internet companies globally. Now, these are basically, small vertical apps. Nykaa also is a vertical app. Of course, they are venturing into a fashion in a very big way. And this is a strategy wherein they are moving from vertical to horizontal. So there are some apps which move from horizontal to vertical as well. But fashion has its own set of concerns. How they scale up on fashion, that will decide the sustainability, of these multiples. There's still a lot of work to do on fashion. I think the concerns there are multifold. The first concern is, fashion as a business. So PPC, there's no question mark. They have proved their strength. They've made profits. They've got higher order values. They've got a first move advantage. They are better versus competition. They've got a very premium customer base. All that is fine. But I think fashion will be the deciding factor in terms of where the valuation moves from here on. So a couple of concerns there. One is, of course, fashion as a segment has got a higher return percentage, which increases your reverse logistic cost as compared to PPC, where the return percentages are phenomenally low. Fashion as a segment is highly fragmented, so they have no first move advantage here. There are large incumbents who are there. Fashion as a segment is more privy to discounting, as compared to marketing. So I think a lot of cash burn can happen there. And fashion as a segment generally also is very low margin nature because of the competitive intensity there. So I think we'll have to monitor the growth in the fashion, the numbers around fashion to actually, get a sense in terms of where the valuation multiples can move.
Okay, so that's the word that's coming in on valuations and the visuals on your screen. You can see boss lady Falguni Nair, who started Nykaa after she hurt 50, gave up a very successful career as one of the leading investment bankers of this country. That time she used to be with Kotak Mahindra Bank to start Nykaa with her daughter Advaita, who you can also see on your screens in that multicolored sari with the stripes. She's also being flanked by her husband Sanjay Nair, who's the big boss at KKR, as well as her son Anchit, who's part of the business. So I should just look at those visuals that are coming in. And like Karan was pointing out, the future trajectory of Nykaa. Can it continue to build the inroads that it is doing in the smaller towns? It has certainly started to do so. Most of its sales are now coming from outside of the metros. And fashion, its next big bet.
Yeah, absolutely. And I can see Katrina KF as well. Remember, she's got her own beauty line called K Beauty on the Nykaa platform. But that aside, while Nykaa continues to be an inspiring story, Karan, if I could come to you, Nykaa at 2,500 crore rupee sales is valued at 95,000 crore rupees. The market cap has already hit 1 lakh crore rupees. It's trading at 40 times sales. On the other hand, Marico, I mean, not a peer-to-peer comparison, but within somewhat of a overlap space, if I can call it that. And the quarterly sales of 2,500 crore rupees is valued at 70,000 crore rupees, which is 7 times sales at 10,000 crore rupees of annual revenue, and still looks expensive to most analysts on the street. Has the time come to, perhaps have a different lens altogether to try and evaluate some of these new age businesses?
Yes, as you rightly said, most of these new age businesses have to be looked from a different perspective. I think they will continue to command a big premium multiple versus the traditional businesses. I think we are moving from an ecosystem, which is platform agnostic, towards an aggregation-based ecosystem wherein customers would not, want to call directly from a brand website or from a brand app, but from a platform. So today are the times of aggregation. So in the BPC space, there is no doubt about it that Nykaa is a market leader in terms of online BPC segment, and they could further scale up their market share because there is competition there. But whatever Nykaa has in terms of customer recall, that is really unmatched. So that's on the entire market share part. As far as the valuations are concerned, why the premium? I think that the answer to that is the growth and the penetration story. So if you look at a T2C brand, if they scale up, the kind of money they have to spend to acquire customers is very high. And they're not able to scale up the customer base because they don't have that multi-offering, which is there, which an aggregator or a platform would give them, right? So I think today is a time of platform wherein the platforms have got a varied variety of offerings, and customers really like more of variety. They don't want too many apps for one particular thing. So I think that is going to drive growth, for companies like Nykaa. And second, of course, is the story of penetration. So clearly, there's a very huge opportunity, in fact, for penetration. And I think BPC is one of the most compelling segments. BPC per se, has not seen a huge decline in terms of order value in the tier 2 and tier 3 markets, unlike other internet companies wherein once you move from metro cities to tier 2 and tier 3, there's a sharp decline in terms of order value. So I think BPC is a very compelling story, even in the tier 2 and tier 3 cities, and that is what is going to drive valuations for Nykaa versus the traditional FMCG companies.
No, so I would like to add here that Nykaa, the content flywheel that they have actually created is extremely compelling, okay, right? And if you've seen the past track record, they have managed to reduce the customer acquisition cost, which has been the bane of most of the companies, from 1,200 to 200. That is based on the brand strength and also some of the tailwinds because of COVID. The content flywheel of Nykaa, they have a lot of personalized content, and through the Nykaa channels, the Nykaa Army, the Nykaa TV, and all of that. And two, they also have a very large influencer community in the PPC category in India, supposed to be the largest, they claim. What it does is it gives you great content. The content gives you good consumer engagement. Consumer engagement means more traffic will come in. So more traffic will lead to more transactions, and more brands will list, and therefore you get into more engagement and more content. That flywheel, and what the jargon that we use is a two-sided network effect, that is extremely compelling. I agree with Karan about the fashion being competitive, but I'm not despondent about that, primarily because you will see a huge shift moving to online fashion. When that shift happens, various players will grow, including the leaders and including Nykaa. As you have seen with Amazon and Flipkart, when Amazon came in, Flipkart business increased. It didn't decrease because the sector expanded. The real expansion and growth will come because of people who are shopping offline moving to online. Therefore, presence of existing players really does not matter. But one fear that I have, not fear, a concern is, you have seen now the emergence of super apps. They are the super platforms, whether it's Reliance trying or Tata trying and all that stuff. Now, will the traffic move to super app, and through the super app will move to other PPC and fashion site rather than coming to Nykaa, is perhaps the only concern or question I have in my mind. Otherwise, I don't see anything that is stopping the growth of the company. But again, is this valuation already factored in? Is the price okay? That Karan and Analyst will be able to comment better.
We can go on debating about whether or not you're willing to pay such high price for Nykaa, which is a great business, no doubt at that. But Ganesh, Karan Taurani, great to have you both in and join in at this momentous occasion, going from strength to strength, already hit the 1 lakh crore rupee market cap. Nykaa on listing day is definitely going to go down in the Hall of Fame.